Welcome to the deep dive. Ever feel like finance and AI are just speeding ahead almost too fast to keep up? Well, you're definitely in the right spot. We take all that dense research, the data, the reports, and we boil it down. We give you a powerful, actionable blueprint made just for you. Today, we're cracking open the strategies the really successful firms use, how they manage money, risk, investments, all of it. Our mission, and this comes straight from the source material, is to hand you a lifetime blueprint, something to really help revolutionize your approach to wealth. Because AI in finance, it's not some fancy extra anymore, is it? It's the ultimate unfair advantage. And the numbers, you just can't argue with them. Firms using AI, they're seeing returns up to 20% higher. And at the same time, they're cutting operational costs by a massive 30%. It's huge.
It is huge. And what's really key here is that this isn't just, theory. It's not abstract. We're going to break down the actual tangible ways this tech gets used. Things like super fast stock trading, really sophisticated risk management, and also maximizing your portfolio with these advanced optimization models. We really want to make sure you get those actionable insights so you understand how this tech turns into actual financial power without, getting lost in the jargon.
Okay, yeah, let's unpack that. Because when we talk AI revolutionizing money, it feels so current, so recent. But this story, it didn't just start yesterday with these new fancy models, right? It's been decades in the making, a mix of human ideas and machine power.
Absolutely. Yeah, if you look at the bigger picture, this boom we're seeing now, it's built on, decades of smaller steps. The real early stuff, the groundwork, that was laid way back in the 1950s. You had these early neural networks starting at Dartmouth College, and even then they were testing them out for stock price forecasting.
Wow, the 50s. So that the basic idea was there long before the computers could really handle it.
Yeah, exactly. Yeah. You jump to the 1980s, that's when algorithmic trading really makes its debut. And that time gave us, a huge collective lesson. The Black Monday crash in 1987. That whole event was just a stark reminder of the danger. When automated selling just spirals without any human checks, it really changed how people viewed risk in those fast systems. Then, fast forward to the 2000s, machine learning just explodes. It really fuels quantitative trading. Wow. And that's where you see these incredible stories like Renaissance Technologies, reportedly pulling in, 66% annual returns with their quant models.
66% annually. That's just mind-blowing. What were they doing differently back then? How did they get so far ahead of regular hedge funds?
Well, they went way beyond just simple metrics. They started analyzing these huge unconventional data sets, stuff like weather patterns, specialized industry reports, things that traditional analysts just weren't looking at, finding those tiny edges. Then by the 2010s, that kind of power starts to, trickle down a bit. It gets more democratized. That's when you see the rise of robo-advisors, like Betterment. They use sophisticated AI algorithms to basically cuspy billionaire-style portfolio strategies, but for the everyday investor.
Right. And that brings us to now, 2025. And generative AI is, it's clearly the star of the show. It's automating everything, summarizing earnings calls, predicting cash flow, you name it.
And the scale of this acceleration, it's not just talk. The official numbers back it up. The Stanford AI Index for 2025. It reported a 40% jump in AI patents just for financial services. Last year alone, that tells you something. It signals this isn't just growth anymore. AI is now a competitive need, not just, a nice to have. Okay, so let's dive into the core stuff, your AI financial toolkit, basically. I want to hit the 5 main ways this tech gives you a real, measurable financial edge. Starting with, let's say, the market offense side.
Okay, let's kick off with the one that sets the pace, algorithmic trading and optimization.
Right, so algorithmic trading. Here, the AI is just churning through terabytes of market data, milliseconds flat. It's predicting trends using complex natural language processing, NLP, on everything. News, regulatory filings, even social media chatter. And that speed, that rapid processing, that's why firms are consistently seeing 15 to 20% better alpha.
Hold on just quickly for anyone maybe newer to this. When you say alpha, you mean excess returns, right? What are we measuring that against?
Good point. Yeah, alpha is the return you get above a benchmark, like say the S&P 500 index. So getting 15 to 20% better alpha means their AI strategy is just crushing the general market performance. And what makes these newer models so good is that the NLP isn't just, counting keywords anymore. It's smart. It's picking up on subtle language, sarcasm, shifts in tone within SEC filings, things older models would totally miss.
Okay, and based on the notes we reviewed, there's a really specific tactical tip there for market timing. It said, use sentiment analysis, specifically on X, formerly Twitter, to gauge that immediate stock buzz. Apparently, a verified spike in mentions for a certain stock ticker that can actually come right before a 5 to 10% price jump. That's fast, actionable intel.
Exactly. Now, if AI is that good at boosting returns, you've got to talk about protecting that capital too. Which brings us to the next critical area: fraud detection and risk management. Machine learning models here are working in real time, flagging weird anomalies in transactions. And what's really cutting edge in 2025 is this development of agentic AI. Think of them as these autonomous agents. They have goals. They don't just tell you about a threat. They actively block or reroute suspicious stuff, like a digital bodyguard for your money. And this kind of rapid defense, it's saving banks somewhere in the realm of $5 to $10 billion every year. It's huge.
Wow. And for people focusing more on their own, long-term wealth building, the application is much more personal. That's robo-advisors and personalized wealth building.
Absolutely. The AI tailors investment portfolios just for you, based on your specific risk tolerance, your goals, even things like your projected cash flow. It really democratizes access to these sophisticated strategies that honestly used to be just for the super rich.
And here's a key takeaway for you, the learner. You can actually use generative AI tools now for some pretty advanced what-if planning. You can literally ask a specialized financial chatbot something like, hey, simulate my retirement. What if I put 20% into AI stocks for the next 10 years, but pull back on real estate? And tools like Wealthfront, they can project that out, maybe show you a targeted 7 to 9% compounded growth based on those specific inputs you gave it.
Okay, moving to number 4, predictive analytics and forecasting. This is really the powerhouse for CFOs everywhere. AI crunches historical data, real-time data. It gives highly accurate predictions for cash flow, for credit scoring, and those crucial economic forecasts, like predicting how inflation might hit different types of assets, say short-term bonds specifically. We're seeing CFOs report 25% better accuracy in their budgeting just from using these models.
Right. And finally, number 5, the one nobody loves but everyone needs: regulatory compliance.
Yeah, this is all about using automation for defense, but also efficiency. AI automates those critical checks, things like KYC Know Your Customer and AML anti-money laundering screenings. Plus, you can use NLP specifically to parse these incredibly complex global regulations. For instance, spotting maybe a cross-border trade transaction that instantly trips a specific GDPR rule, making sure the firm stays compliant with way less manual effort.
Okay, this is where it gets really juicy, I think. Moving from the what to the so what, the real-world proof. We're talking major corporate case studies with huge measurable results, saving time, preventing losses.
Let's start with JP Morgan Chase. They have this platform called CoinN. It's an AI that processes specific commercial loan contracts. It analyzes them, pulls out key data. It handles 12,000 contracts a year in just seconds. And according to the source material, that saves something like 360,000 lawyer hours.
Okay, 360,000 lawyer hours saved. That sounds amazing. But did the source material mention accuracy? Like, are there certain types of complex legal documents or really high-stakes deals where this automation still kind of struggles and you need that human touch?
That's a really important point. Yes, the source material does emphasize that. While Coin is great for the bulk of routine contracts, handling them flawlessly, you absolutely still need human oversight, especially for contracts with really complex or maybe ambiguous custom clauses. The key is the AI handles the volume right, which frees up the human experts to focus on the really tricky stuff.
Okay, then look at risk management in action. HSBC, they detected over $1 billion in scams just in 2024. And they did it using behavioral biometrics, stuff like analyzing your unique typing patterns, how you move your mouse, to instantly flag if it might be a fraudster. And of course, we have to mention BlackRock's Aladdin platform. Manages $21 trillion in assets. It's a beast. Its strength is AI risk modeling. And it's credited with successfully dodging the 2022 crypto winter. How? By proactively flagging those high-risk assets and recommending portfolio shifts before the crashes happen.
That is a massive real-world stress test right there. Huge validation. And on the lending side, you mentioned Upstart. Their AI credit models approve 27% more loans and do it fairly. Right, their model goes beyond just the old FICO score. It looks at hundreds of other factors: educational background, job history. It's actually a good example of how AI can create, broader, more inclusive economic opportunities, not just make things faster.
And just to make this really practical for you listening, we wanted to quickly flag a couple of specific AI tools mentioned in the sources that you can check out today. Definitely look into AlphaSense, great for market intelligence. It uses AI search on filings, news, and also Anaplan. That one's more for collaborative AI scenario planning. Lets teams model different outcomes together.
And this huge shift we're seeing, it's why those key industry figures, the voices of the vanguard, as the source called them, are so clear about this. It's about augmentation, not replacement. Look at Bill Gates. He said, AI is going to change the world more than anything in the history of mankind, more than electricity. I mean, that level of impact, it just underlines everything we've been discussing. But the point is really about shifting skills. Ginny Rometty, former IBM CEO, she put it perfectly. She said, the technology will augment our intelligence, not replace it. The future really belongs to the people who learn to use this tech, not the ones who are afraid of it.
Okay, so bringing it all together, what's on the horizon? We know adoption is just skyrocketing. By 2030, PwC is forecasting that AI will handle something like 80% of routine finance tasks.
Wow.
That's a seismic shift in how finance departments will work.
It really forces us to look ahead. What trends are coming next? We're going to see agentic AI get even smarter, evolving into these autonomous agents that could literally negotiate multi-million-dollar deals or hedge risks without needing constant human approval. Imagine an AI acting like a CFO for a small business. We'll also likely see quantum AI hybrids start to emerge, using quantum computing speed for incredibly fast risk simulations, cutting down the time it takes to price really complex financial products. But, progress always comes with new risks. We have to be aware of the potential for what they call black swan errors. As these systems get more and more complex, one tiny error in the data could just ripple through super quickly, lead to massive losses, kind of like the lesson from Black Monday, but potentially faster. So how do you mitigate that? It demands this relentless focus on explainable AI. We need to be able to understand how the machine reaches conclusion, not just blindly trust the output.
That's absolutely crucial context. Okay, let's wrap this deep dive with the beginner's blueprint. This is your 6-month launch pad. How you can start gaining real competence in this space. This isn't just a checklist. Think of it as your action plan. So, month 1, what do you do? Focus on mastering the ethical side first and the basics of machine learning. You really need that solid grounding before you even touch any code. The source material specifically recommended something like Coursera's AI for Everyone as a good starting point.
Right. And the reason we stress starting with foundations in month 1 is all about critical thinking. If you don't understand what goes in, you can't possibly trust what comes out. That basic knowledge lets you spot potential biases in the data or errors in the model before they end up costing you money.
Okay, then months 2 and 3, this is where you get your hands dirty, right? You need to install Python. That's really the main language for data science, and those key libraries like NumPy and Pandas for handling data. So once you've got the tools installed, what's the very first simplest thing you'd recommend someone try?
Okay, once Python's ready, use the Yahoo Finance API to pull some real market data. It's free and pretty easy to access. Your very first practical project should be building a super basic trading bot. Look, it doesn't have to make money, not at all, but just the process. Coding it, pulling live data, seeing a system actually react based on your logic. That's the steepest, most important part of the learning curve right there.
Got it. Then later stages, say months 4 through 6, that's moving towards simulation and really honing skills.
Exactly. Now you take that basic knowledge and start simulating portfolios. Use specialized platforms like QuantConnect. The sources really emphasize this. Iterative mastery means you need a safe place to fail. Use those simulation environments. Test out different trading strategies. See how your AI algorithms perform under different market conditions, all without risking a single cent of real money. And while you're working through that technical plan, keep those cultural warnings in mind, the ones woven into the source material. Think about films like The Big Short. It shows the power of predictive analytics, right? Seeing that huge flaw in the housing market nobody else saw. But then you have Margin Call, which dramatizes what happens when algorithmic trading goes horribly wrong. Use those stories. They're like mental models for both the potential upside and also for recognizing those really dangerous failure points.
Right. So the core takeaway here is pretty clear. AI in finance, it's not some distant future thing. It's like the new gravity. It's pulling wealth towards those who are prepared. You now have the map. You know the applications to use, the tools you can start learning, and the trends you need to watch.
And mastery here really compounds. Just by dedicating, say, a few hours each week to follow this kind of blueprint, you're building this powerful financial lifeline for yourself. Something that ensures you still smarter, more efficient, and ultimately more profitable no matter what the market throws at you.
So earlier we mentioned that 2024 Indian film Lucky Bhaskar. It kind of weaves together finance fraud and tech tricks. And we've spent this whole time talking about how autonomous AI can be the ultimate shield against fraud, right? Spotting tiny anomalies in milliseconds. But here's a thought. Given the speed and the self-learning power of this agentic AI, could a system designed purely to protect, if it was somehow compromised or maybe just given a slightly different goal, could it become the ultimate architect of some new, completely undetectable form of financial fraud? That's something for you to think about as you start your own journey into AI mastery.